All right, so this week's market changes are showing 2023 is going to be a bumpy ride for not only the economy, but the housing market as well. I'll be going over those stats and stories in today's update, and stick around to the end where I'll share some insights into what you can expect for the year ahead and how you can start preparing now. That's all coming up right now. If this is your first time to this channel and you want to know everything about living, buying, and selling in Southwest Florida, then subscribe and tap the bell for notifications so you can be the first to know about the current market, latest news, and newest tips to keep you ahead of the curve. I'm Rick Harrison with the Home Sold Guarantee Group at MVP Realty here in Southwest Florida, and my team and I are getting calls, emails, and texts every day from people just like you looking for help on making their move to the greater Fort Myers area, and we absolutely love it. So whether you're moving in 9 days or 90 days, give us a call, shoot us a text, send an email, or even schedule a Zoom so we can help you figure out exactly what you want and where you want to be. All of our information is in the description below. So as I mentioned, we're talking about what the housing market is shaping up like for 2023 and the news that seems to keep growing colder with inflation, corporate growth, housing data, and stocks. But before we get into those stories, let's go over this week's local market stats to give you some insights into what's been going on in our market. All right, so in this week's market update, we start off obviously with the southern part of Southwest Florida, which is where I'm mainly located. We're comparing last week's stats to this week's stats. So last week we had 834 new listings. This week we're down to 688. That's down 18%. We had solds went from 665 to 608. That's down 9%. And then we had pendings go from 752 to 670. That's down 11%. So in all categories across the board here, we are seeing that the market is still slowing down. Less listings obviously coming on. That goes into less pendings. So that usually trickles down into pendings, which are what's happening right now in the market. And then solds, which is the kind of the lagging indicator here 30 days ago. That's also down, obviously, because less listings have been coming on. However, as we look at the latest inventory breakdown, single-family homes, we did see a gain here in the southern part of Southwest Florida, up 38 from last week. And then condos, we saw a gain of 138 over the last week. So we had a gain last week of net gain of 121. This week, we have a net gain of 176. So we are still seeing more listings coming on. And that's really due to the fact that even though less listings are coming on per week, we're seeing less people buying right now. So inventory is kind of stacking up right now. Multifamilies went from 138 to 140, just up 2. Foreclosures up 4. Really no big changes here in these two categories and haven't been for several weeks now. This is just a quick, really a quick breakdown or snapshot of what's going on in the market from November. Median sales price was around 360. That's down 2.7% from last month. So we have already seen a decline in home prices, the median sales price across the market down here. Closed sales, 2339. That's also down 2.3%. Median days on market, that's down to 26. That was up almost at 30 before. So that's down. And then active inventory is just slightly down, 17,188. New listings are up 20% month over month, so that's up 4271. Moving into the northern part of Southwest Florida, Punta Gorda up to Sarasota, we had new listings went from 1446 last week to 1290 this week. That's down 11%, following the same pattern as the southern part. Solds went from 1758 to 1355. That's down 23%. And then pendings went from 1598 to 1443, also down 10%. So same pattern here. We're seeing less listings coming on. It is slowing down. We're also seeing less pendings, less homes go under contract. That's what's going on in the market right now. So there's less buyers in the market right now. And then solds is the lagging indicator. 30 days ago, there were less homes going under contract 30 to 45 days ago as well. Same thing. With the price decreases, we are seeing that decline. That is all really due to the fact that there's less listings coming on and the market is slowing down. As we move into the inventory this week, for the northern part, we actually saw a net loss of 32. We had a net gain of 152 units last week, a net loss of 32 this week, mainly coming from single family homes. So it seems that more people have bought over the last couple of weeks with single family homes because the interest rates did decline from their peak at around 7.2%. They went back down to almost 6% in certain markets. Same thing here with multifamilies and foreclosures. Not much of a change in either direction for either of those in this area as well. Here's a snapshot for the northern part of Southwest Florida for November. Active listings month over month were up 2%. New listings were down 9% month over month. Pending sales, which is what's going on right now, did slightly increase in November. And then we also saw listings sold decrease almost 20%. So that's kind of giving you a pretty good indication of the overall market conditions right now. Interest rates, we saw those actually decline week over week, went from 6.2% last week to 6.089% this week. If you watch my market update from last week, you saw that with the bond market and the technicals in the bond market, we did see that we were probably going to be declining a little bit before we saw a spike back up to a lower high, which I'm going to be covering next. Bank rate had the average going from 6.67 to 6.60%, down just down 7 basis points. Mortgage applications actually increased week over week, 3.2%. Most of that coming from refinances and a slight increase in the VA loans. FHA and USDA's FHA's went down and USDA did not change, which it hasn't changed in several weeks now. So what's the scoop? Let's take a look right now at the bond market and what's going on. I did show you indicators last time of what was going on with that. So as you can see, I drew the declining wedge, the declining narrowing wedge. Usually what happens with technicals is when that wedge gets about 80% of the way through, we usually see a breakout to the upside. And then it usually tests that lower high, which is where I drew that horizontal line at the top. Again, the reason this is important in the bond market is because this is actually giving you telling you where mortgage rates are going to be heading. So right now we're going to see it head back up. Right now it is starting to head back. I'll put up my indicators here. It's a buy trade right now for bonds. It's probably going to retest this line right here. And when it does, we're going to start making lower lows. And when that happens, we'll see it head back down, which means mortgage rates are probably going to be going back down over the next couple months. So for you buyers who have been waiting for interest rates to come back down, your chance is coming. So start getting prepared. And I'm going to be giving you some tips at the end of this video on how to do that. All right, let's take a look at a couple of the stories here. We got Peter Schiff, obviously a big name in the financial market. He's saying that investors need to understand the game has changed. Inflation isn't going away. If you saw the last CPI report, we did see that it actually ticked up a little bit, which was surprising because we thought it peaked and it was heading lower. So he's actually saying that inflation is already out of control. The Fed failed to act soon enough, and it's going to get a lot worse. And what he's been saying this for quite some time, but you're always going to see an ebb and flow, which is why we saw it decline. The CPI data declined last month. And then this month we saw that it did tick up just 0.1%, but still that's not really favorable. And that's not what the Fed is looking for. So the central bank has even conceded this fact in a paper published by the Kansas City Federal Reserve Bank. In a nutshell, the authors argue that the Fed can't control inflation alone. U.S. government fiscal policy contributes to inflationary pressures and makes it impossible for the Fed to do its job. Bloomberg, Morgan Stanley's Wilson says U.S. profit drop could rival 2008 era. Stock declines may be much worse than investors expect. A lot of people don't think that they're priced into the actual stock market currently, which could be more to the downside. Again, the reason that's important, when portfolios start to decline and people start feeling like the wealth effect is declining, they're not as wealthy as they were. A lot of times that ends up causing people to sell things, whether that's real estate so that they have more money that they can put back into their portfolio, or selling stocks off, which once stocks start selling off, it's like a race to the bottom. So whether it's the housing market and homes, or it's actually the stock market, when people start selling stuff in a panic, it usually leads to people racing to the bottom. How many people can sell? What's the lowest they can get? And that drives prices way down. When that happens, unfortunately, people lose a lot of money in both the stocks and their houses. So U.S. equities are set for their worst year since the global financial crisis. And according to Morgan Stanley strategist Michael Wilson, corporate profits are about to meet the same fate something that could rival what transpired in 2008 and 2009. Here's a new story according to Redfin. Just 3 in 100 pandemic homebuyers would fall underwater with the next year's projected 4% that I talked about in our last market update. I think we're going to be heading somewhere around 15% lower. 4% just really, to me, we're going to see in the next story, but really to me isn't a whole lot, and I think we're going to see a lot more decline. But just 3.4% of U.S. homeowners who bought in the last 2 years would be underwater on their mortgage if home values were to fall 4% by the end of 2023. We got a whole year ahead of us. If the recession gets anywhere near as a lot of these bankers and big hedge fund managers are predicting, I think 4% is it's not enough. I don't think it's a very good projection for it. But just to give you an idea of the chart, 12%, if it were to fall 12%, 10.3% of homeowners would be underwater with their mortgages. Whoever has bought from January 2021 to September 2022 only. Again, I think we're going to see closer to 15%, which you can add another 2 or 3% to that. So we're looking at 13% of homeowners underwater who have bought within the last year or two. Again, this is not something that's obviously, set in stone, but this is just my feelings on it. And, it doesn't help me to tell you to hold off on buying because I'm a real estate agent. So I'm trying to give you the best opportunity and what my thoughts are on the market and where it's headed. Next one, this one comes from the Florida Realtors. Home price affordability is shifting. Where? Well, it looks like it's shifting more towards condos because they happen to be more affordable right now than the single family homes. The median single family home prices crested at a record of $452,000 in May and then slid 8.5%. So going back to the last story, this is what I was mentioning. Home prices have already slid 8.5% since May. So for them to say over the next year, when we're entering into what could be a pretty rough recession, for them to slide only 4%, I think that's laughable. I think we're looking, like I said, closer to 15%. We do have some positives in our area, specifically Southwest Florida, but I do think 15% is going to be what the general market is going to see. Median condo price hit an all-time peak of $341 in May and then dipped 4.5%. So they've also dipped 4.5% since May into October. So first, home buyers started shifting their attention towards the more affordable options, which are condos. Single-family homes price decreased in 88 of 100 markets. And then on the single-family home side, Irving, Texas led the decline with 22% drop, followed by Toledo, Ohio, 20%, Los Angeles, and San Francisco, 18%. So those markets were some of the hottest markets during the pandemic, and you can see why they've already fallen 22%, 20%, 18%. So Southwest Florida was also one of the hottest markets. The only difference is that our market has already experienced some severe catastrophes with the hurricane. Obviously, that reduced a lot of inventory and created some hardships, more demand in our area. But at the same time, we are also one of the number one places for international buyers right now, still to this day. Florida is still number one for international buyers. So this is one of the advantages we have in Southwest Florida, why it might not affect the recession, might not affect home prices as much in our area. However, of the buyers that are buying in Florida, 24% of them are international buyers, mainly coming from China, and then followed by Canada, India, Mexico, Brazil, and Colombia. So we are still seeing quite a bit of demand from foreign investors and foreign home buyers. However, the other side of that too is the hurricane obviously decreased our inventory and increased our demand for homes from people who already lived here and were displaced. And also the fact that everybody still continues to move to our area. Those are some reasons why we might not see too much of a decline to the 15% side. However, I do want people to be aware that I am expecting 15% to be an average across markets. We're already seeing some large declines across a lot of the markets as is. Now, for you home buyers who have been waiting patiently, I want to make sure you're able to capitalize on the shifts that have already started taking place and should continue getting even better for you in 2023. So let's go over some things you should be doing with this time you have to prepare. First, you want to get your credit in a good place. Obviously, make sure you're paying off your credit cards, reducing your balances and keeping them low. You probably have a couple months to start preparing for some good buys, and this might take some time, but you want to make sure that your credit is really in top condition to get a great interest rate on your loan. Also, if you've been looking at homes but haven't been finding much, you want to reach out to a realtor near you who knows the market well and ask them to help you find off market properties. So that's important. A good realtor should know how to do this, but if not, reach out to me and I can explain what you need to ask them to do. Off market properties are first going to give you a better chance of finding what you're looking for, but they're also going to eliminate the competition and give you more leverage when you make your offer on the price and the terms. And then lastly, while you might not be ready to get pre-approved yet, you should start looking into some of your loan options because there's some really great programs down here now in Florida, like the Hometown Heroes program, which will actually cover up to 5% of your down payment and closing costs. So sometimes, depending on how much money you put down, some people put down 1,000, some people put down 5, or even more. But basically, you might even be able to not have to put anything down, depending on what the price range is for the home you're offering or making an offer on. So, but you do have to qualify with certain public service related jobs for that program. But there's also plenty of other programs out there too. So if you'd like help with exploring some loan options, even if you're self-employed or need some creative financing, which I do have a lender who does some pretty creative financing, I'd be happy to give you some information and refer you to some of the top areas, lenders that we work with. So, well, that's it for me today. If you got value out of today's video, please hit that like button to let me know. And don't forget to subscribe so you're the first to be notified of the latest data, tips, and happenings in our market. And again, please don't hesitate to reach out for help or questions, as many of you do. Our contact info is in the description below. Well, that's it for this week's market update. I hope to see you again next week. But until then, stay safe, stay positive, and more importantly, stay free.